Really excited for today, and I can't stress enough, use the message and Q&A side of this. We are going to have this be more of a fluid conversation. Rags and I have talked about this stuff personally before. This conversation is not for Rags and I to engage with one another and be, although I'm very excited about it, we're more so excited to answer your questions, get to the things that are on your minds, and answer those questions, and then hopefully also dive deeper into the book, which I've been really excited to read, and really excited that you're here to talk about it. So without that, let me just make my introduction. I am Director of Evangelism for New England for SVB. So what that means is I help founders with everything outside the banking, thankfully for everybody. And so SVB helps startups, early stage and beyond, to do all the things they do with banking and financial side of the house. So anyway, Rags, I'd love to have you make this introduction, and also then kind of dive into the beginnings of why you wrote this book, and what we can sort of where this all started.
I will, but Jesse, you're selling yourself short. You're also an entrepreneur yourself in a prior life. Maybe you want to talk a little bit about that. Yeah.
Fair. That's true. That is a big part of this. Thank you. I'm a recovering founder, having been through a company called Evertrue. We actually just had our exit 2.5 weeks ago. So exciting times for that team. I was the co-founder there from inception in 2011 through Techstars Mass Challenge. Scaled the company up to about 8 million in ARR. So very much in the wheelhouse of what Rags is talking about. Left after eight years to join SVB as a founder for founders, but ran sales, customer success, and customer experience. And why, when we were talking about this a long time ago, I was so excited about the book, and then also doing this conversation with Underscore, because just sort of the Venn diagram of the things I'm interested in, the people that I spend my time with, it's very much this. So thank you very much, Rags, for reminding me of that other part of my life.
Awesome. Thanks again, Jesse. Excited to do this, and hello everybody to the Underscore community. What an awesome community, and what a privilege to be a part of it. So I'm Rags Gupta. I've been in tech since like the late 90s. During the dot-com boom is really when I got into tech. In the first place, inspired by a professor of mine in undergrad. And since then, I think Butler, which I'm doing now, depending on how you count it, is startup number 7 or 8. And in terms of full-time, ventures, and those have included, one that became a zombie, one that we shut down, one that's still going strong, Humatics, my last company out of the MIT ecosystem. I was part of the early team at Brightcove here in Boston in 2005, and stayed with Brightcove through the IPO. That was spent a bunch of time in the UK, and with a company called Videoplaza in the video ad tech space. Again, enterprise SaaS. We sold that a couple years later to Telstra. My current company right now is Butler. It's a MIT spinout again, out of that ecosystem, doing this next gen kind of occupancy sensing and spatial analytics type platform. But overall, I just love entrepreneurship, and I love partnering with entrepreneurs. And that can take the form of everything from doing something all in and full time, to being an advisor or board member, to just being a passive investor, as I am. I've been fairly active on the angel investing front over the last, especially couple years, with another local outfit called TBD Angels. I really enjoy mentoring at MIT Sandbox and some other forums, and I just love working with entrepreneurs. It's just my jam, and that was partly also what led to my writing the book, which was a pandemic project, which came out in October.
Awesome.
So happy to go deeper into it, but that's a little bit about myself.
Well, I actually, on that theme, there's a part of the beginning of the book that resonated with me tremendously. I'm just going to read the passage, and then I think that kind of sets us off to where we need to go. But it says, I, for one, have seen this movie play out many times during my 20 odd years in tech, which you just described. And yet it's a phase, the 1 to 10, rarely discussed in the startup world. Plenty is written about finding product market fit or navigating blitz scaling hypergrowth, but the transition phase is rarely talked about. I'm here to change that. This book will help you through each step of the 1 to 10 phase. And indeed, that is the way it is laid out, and that is what you set out to do. Talk to us a little bit about, first and foremost, why do you think that this isn't talked about all that much? This particular phase, and a phase that you've actually been in now for 20 odd years.
Yeah. Well, that's a great question. I think let me take a step back and let's just define the phases, right? So, obviously 0 to 1, which is obviously a play on the famous Peter Thiel book. But, I define it as really the kind of innovation phase, right? It's where you've got some insight, some spark, some knowledge about the market, about the future that you're then exploring, right? And it's really, establishing that product market fit. From a product perspective, you're going to have prototypes and alphas and betas, but you might have some missing features or hardening of the product. It's most likely founder-led sales are very strongly influenced by the founder. You're probably in, depending on the type of business or industry, pilots and betas, but you're still defining your ICP, your beachhead markets. And team-wise, again, you're going to have people wearing different hats. Key functions might be outsourced. And from a funding perspective, you're probably pre-seed, seed type of phase, right? And the 1 to 10 phases, it's a transition phase. It's like establishing that product market fit and really going to go to market fit, right? Of like, what's the right motion to go to market with, and how can you then stamp out your product in a repeatable way? You're hiring out your first go to market team. Your feature complete, at least in some part of the product that can just be predictable and repeatable. You're building out your executive team and key functions, and funding wise, you're sort of series, anything from a C to a series B, frankly, is depending really on the market. And big caveat overall for anything we talk about is obviously a lot of there's so much that's like really context specific for companies, right? I really recognize that, and but at the same time, what I've tried to do is articulate general principles and general frameworks for people to think about that at least help me in navigating some of these. Back to your question, Jesse. So, it's like this 1 to 10 phase. It's messy. Like it actually, like one of the books I cite, which I think is a great book for people in the space, is Messy Middle by Scott Belsky, who actually happens to be an angel investor in Butler. And it's like, there's sort of the beginning phase, right? It's like everything is shiny and you've got new people, your founding team, you're out there, you've got your first funding. And then there's sort of like, once you've figured it out, there's like the next phase, which is like, your exit, your growth, your hyper growth. And I've read a lot and listened to a lot of podcasts, and they just talk a lot about that. Like once they've kind of made it, right. And it repeated. And yet a lot of the companies I've been in or worked with struggle. Like they struggle to like get beyond pilots. They struggle to get beyond the founder selling. They struggle with all kinds of org and human, capital challenges. And so that's kind of, that was, one of the insights I had was it's messy. A lot of people maybe don't talk about it as such. And it's just easier to talk about sort of the early beginning and at the end when you're scaling and like you're growing, to $100 million in revenues or whatever. There's just a lot, that's what people want to write about.
Yeah. Yeah. No, and one of the things I appreciated about the book as well is the way that I don't know for anybody else who used to read the Choose Your Own Adventure books, but certainly what you've done in this book is like, hey, if you're already past this piece, like jump here to this chapter, because this chapter is going to highlight where you are in the next part, and almost like a thermometer for entrepreneurs to understand, like, okay, I'm actually physically, this is where this company is at. And I think that that's super helpful because sometimes you are, as you said, in this weird, being in this weird zone. And I always talked about, when I talk to founders, all the time, it's like in that scaling phase, you also have this scaling phase of people too, that gets awkward. And when you get to the 15, 16, it does feel like your tween years. Like it really, like who's managing who, like how do we figure out what we're going to be doing with the senior level folks and all of those. And it's awkward. And so this is, I think, also articulates that weird maturation time in terms of this. And it's not, some people are well ahead and are farther towards the second half of the book than there are, first people in the first half of the book. And I think in that respect, it's an easy, it's not an easy read. I would say, like, depending on where you're at, it could be a very painful read, but it is a read nonetheless of, okay, I'm going to skip some of this stuff because I've actually felt that. Okay. I know where we're at. Talk to me a little bit about like the way you how did you write it that way? How did you write that kind of choose your own adventure?
Yeah, I mean, so a couple things. I think like fundamentally the insight was, with everything that's happened in entrepreneurship and tech, right, in the last decade plus, right, it's like quote unquote easier than ever to get from 0 to 1, right? So there's accelerators and incubators and funding mechanisms. There's AWS and there's so much kind of infrastructure that's been built up, right, to get your first version of your product, to get your first customers, to get your first funding, right? And yet, like as I was saying before, it's harder than ever to kind of get to 10. And the other way of defining 10 is like certainly 10 million in ARR and revenues, but it can also mean for deep tech companies, 10 deployments, like 10 robotic deployments or 10 whatever, however you define it, right? Because you can kind of throw bodies at like your first couple, but it just doesn't work to get to 10, right? And again, like to do it repeatably and scalably. And so, in the book, I introduced this framework of this three-legged stool, right, that you need to have in place to get to 10. So you need product readiness. So you need a product that's hardened, that is repeatable, right, and that is minimally viable, obviously, but has like the table stakes and everything else to be able to get there. And we can go deeper into that. The second is repeatable sales, and really going beyond founder-led selling into repeatable selling. And that means like, how do you hire your first people and salespeople? How do you comp them? How do you manage them? How do you manage processes? And I should mention that the book is really targeting B2B technical founders. So it's maybe less relevant for B2C type businesses, which is less kind of my experience as well. And then the third leg of the stool is scaling your human capital, which is really oftentimes in some ways it's the first among equals that way. And that's like scaling yourself, figuring out roles and responsibilities, building out an org, delegating, and really getting everybody aligned, to sort of, figure out how to take your vision, your mission, and translate that into a strategy and an operating plan and all that stuff that you need. And to your point, Jesse, earlier, there are companies that are like in much farther along in one part of that, those dimensions than others, and they kind of have to catch up, right? In fact, there's a company I'm on the board of right now, and they are way ahead on certainly on the product side and on the sales side, right? But they're behind on the human capital side of things. It's the business has taken off so quickly. This is a company called Dvinci, that they just, in a way, they've been playing catch up on the org and hiring side of things, right? And this is something that's very well known, but this is something they have to do to really get to that next level.
And I think it's to your point, and you and I actually have been on a previous conversation during Startup Week about this, but it's a lot of what we're seeing right now in this like jump to like this chief people officer or like this different kind of an org that's spinning up that I didn't have when we were building our company, and probably there weren't a whole lot of those folks pre-pandemic even, but now I would beg to say it's probably the hottest job in startups. This like that kind of org spinning up to the point that you've already articulated about that people part of the business. And what does that look like? It's no longer just HR. It's there's so much that comes into that. and
Not,
especially with your business right now.
it's not, and not to kind of get too much into the rabbit hole there, but I was just on some threads earlier this morning where I think companies in general underinvest in management training and coaching for their own managers, right?
Mm-hmm.
This is something that I know other people are now starting to invest in and get coaches or get people, because kind of teaching your managers, often, who many of whom are first-time managers, on the fly is risky, right? And I've certainly had that myself, right? Where, first-time manager, no one's taught them how to manage, right? They've gone to school for other things, or they've been taught other things, and no one's taught them how to manage. And as a result, they can make, very understandable mistakes, and which leads to, attrition or churn or morale issues and things like that. You've got to clean up eventually, right? But with, some coaching could have been an ounce of prevention and would have just, gone a long way, right? And so that's, I think, something in general, growing startups really in that 1 to 10 and growth phase underinvest in. I think they could invest in a lot more.
Yeah, and I would echo that in before the pandemic. I think that was a huge key, and it was, for me, I was lucky enough when we were building out Evertrue that we really wanted to level ourselves up, all first-time founders and team. So we did Intelligently, which is no longer out there, but things like Eager Labs, ASUP, both great Boston companies doing things like that, and it made a huge difference. But I would say in a remote world, it's even more important because you don't have somebody kind of like can walk by and hear the conversations or look over your shoulder and see that something's working or it isn't working. And so now intentional coaching, intentional management and upskilling, and then also retention. All those aspects come into this. I think it's a huge part. And I think going back to your to the 3 legs of the stool, I think that the scale of the human capital, I'm happy to dive into more specific things there if there are questions. I know there is a question here from Cecilia. I'll share it here, and then we can kind of go back. But everyone has their thoughts on and how to balance your own conviction versus people's feedback. What's your advice for founders? Do you, Rags, you want to take that?
Yeah, I'm happy to take it. And I think, Jesse, you've certainly seen a lot, and love to get your take as well. Look, entrepreneurship, the best entrepreneurs have this paradox where, on the one hand, they have strength in their convictions and their insight into how the world should be, and to a technology insight, a market insight, and they're just like, I see something that others don't see, right? And at the same time, they have the humility or the awareness to be able to know what the market is telling them and be able to change tack, right? And call it a pivot, call it change, just adapt to the environment, right? It's kind of a paradox, right? Because you kind of need both, right? So I don't know that there's any hard and fast I would like that advice. It's got to be context specific in terms of whatever the situation is in terms of your insight and what you're hearing. It's really hard to generalize. What I will say is, oftentimes we don't peel the layers enough of that onion of that feedback that you mentioned, right? So people may say, "Oh, this doesn't work for me," but then it's like, why doesn't that work? And then go another couple levels deeper, and because it's just easy to move on. And then again, it's sort of like that old saying, that old saw, which is if who was it? Henry Ford, I think, or someone said, if I listen to my customers, they'd want a faster horse and carriage, right? And so what you're really trying to understand is what is the actual job to be done? Again, a great framework, I think, from Clay Christensen. What are they actually asking you, right? And what's the actual feedback they're giving you, and not just on the surface.
Yeah, and a couple different things here, threads to pull on, but I think the other thing is in the context of the book, 1 to 10, very different than, I run Mentor Madness or Magic for Techstars. There's, that's a much earlier stage of company, and the mentor feedback is sort of we're gonna throw everything at you. And then you as a founder, we're going to put you in this pressure cooker, and you and your founding team try to figure it out, see what's worthwhile and what isn't, and then you connect with mentors and you kind of go from there. But ultimately, none of us are building your business. It's up for you to sort of discern between the whiplash and understand, like, okay, that's great feedback, I'm going to go do that, versus this is great to consider, and but I've got the company that I'm trying to build and go there. I think in the 1 in 10, the kind of way I take that comment is more so like, we were at $1 million in ARR. We had a board, and we had VC dollars in it. That was really hard. It was really hard to have people come in once every quarter or whatever it is for 4.5 hours, present, and then get just endless feedback on what we were doing wrong, to then say, okay, we're going to go, like, do we have to go change everything? Like, I think it took us a long time in that 1 in 10 phase to figure out what are the things that we have conviction around and we're going to go build. But as first-time founders, saying, like, I don't know, I don't think that feels right, but I also just got, my investor just told me that. And same thing for our customer advisory board, where we had, I think it was a great thing to have as part of our business. And it certainly helped us with the product roadmap and things along those lines to get bits of feedback here and there. But you have to have, you ultimately, it's your decision as a founding team and as a C-level team to make the right call on the business, and just kind of like pulling out the things that make the most sense and then executing on on a subset of that is a skill, honestly. Like, I don't know how to say other than, like, you really, it's a mix of trust and understanding your customer and understanding the market, and all those things. And that's why people do invest in you, because they think you can go do that. But it's messy, as we've already talked about.
Yeah, totally. I mean, just a quick on that one, which is, I'm on some boards now. I've done, plenty of board meetings, but it's true. Like, the board members just don't have that continuity, right? And the context, right? And so, you certainly, like board meetings are really useful. It forces you as an entrepreneur to zoom out, right? Get out of the weeds and be like, where are things, right? How are you doing against your plan or whatever you said you were going to do, et cetera. So it's really good that way. It's just this accountability, right? And done the right way, boards can just be a force, just a forcing function and just like a force multiplier for you, right? Because they're going to support you. They're going to challenge you in the right way and spar with you, right? I've also seen situations where that's not the case, right? Where, and I can go into some of those as well. And that can really, you then need to figure out other places to get the right type of input and advice, because it's sort of like a dysfunctional board, and no one wants to speak out, and it's just, kind of not the right setup. And you've got other issues, obviously, at that point as well, which, but you'd want to bear that in mind when you hear advice from a board member. They obviously don't have the context, but they're trying to help you from a different point of view, the 30,000-foot point of view. The danger is when board members start getting into the weeds when you don't kind of necessarily need them to, where you want to try and control that conversation with the board member of, like, what do you need from the board in terms of keeping you accountable, giving you insight on the strategy side. And then, if you need help from them on the tactical side, absolutely leverage them to do that.
Yeah. I mean, just diving a little bit deeper on that, like, how do you pick, for you, how do you pick the boards that you feel comfortable joining and diving deep on with a founder? How do you make that decision? Obviously, all things being the same, and you're like, hey, I actually can give you the time or not. But what are the things kind of you look for there?
Yeah, I'm like really busy myself, like, doing well. So I don't, that's not something I'm seeking right now. And I just have limited bandwidth. But in the past, and with some of the relationships I have right now, it's just about founder and, the chemistry with myself and the founder. Can I get really clear about their vision, and can I add value, and, and kind of, will they listen? They don't have to follow, but will they listen? Right. And it's just very simple framework for me, but it it also filters things out where I'm just like, look, I just can't get excited enough about this, and but I'm happy to help in whatever way I can, right? So
Yeah. Great, awesome. We've got another great question here. Anuj has written, the big trap I've encountered is maintaining and/or revamping culture as you're bringing more people on board. What have you seen work best to mitigate this unavoidable issue?
This is a great question.
Yeah.
And we could have a session just on this, kind of like the session we've done in the fall on that. A few things to think about, right? So the first is the hiring, right? So like how you're looking for people, right? I think you want to be really clear on principles. They can be values, tenets, whatever you call them, but things that are unique to your company and to the culture you both have and aspire to, right? In terms of behavior and what behaviors that people and mentalities that people should have, right? I'll give you an example, right? This is something that someone I know is contending with right now. They're in a culture which is very consensus driven and very bottoms up. So to get something done, right, you need to rally people and kind of rally people to the cause and kind of build it from the bottoms up. That's just like the culture for this company, right? So how could you then filter out people that thrive more on a kind of more, let's say, top down or more structured, less bottoms up type of environment, right? You want to pick those out beforehand, right? Otherwise, you're just going to get people, especially if you're growing fast. There's like convenience bias and urgency bias that creeps into the process, right? So you want to be really clear on your principles and especially what makes them unique. Avoid what a former boss of mine called like motherhood and apple pie type of principles, which like no one can argue with, and it's like people should have high integrity. Well, of course they should, right? And people shouldn't be jerks. Well, of course not, or whatever it is, right? But like things that are really unique. Like this example, like we will search for people that are consensus driven because that is our culture, right? Mm-hmm. And like look for those behaviors that they've exhibited for that, right? The second is once you've brought them on and how are they adding to the culture, and again, like being really clear on behaviors and also the rituals that are both sort of top down and also the rituals that kind of happen bottoms up, right? And I think what you as a CEO, you want to do is like, are those behaviors adding to the culture you have, or are they detracting from it, right? And it can mean everything from sort of set pieces like events to like, is it an email culture or a Slack culture, right? Those kinds of things. That's going to like oftentimes naturally happen, right? In terms of how work gets done. And you want to like I guess I'm sort of rambling a bit, but being really clear, right, on the behaviors and the principles, and what's sort of like what's today and what's aspirational will go a long way. Jesse, what's your take on that?
I completely, again, and I like to keep this within the context of this 1 to 10 sort of mindset that we've got here in the book and in the conversation. I think because so often I'm spending my time in the 0 to 1, right? And in the 0 to 1, you're kind of like making up on the fly, whatever sticks, and you're like, oh great, like that worked, awesome. Let's keep going on that. And the things that I am seeing right now that I'm hesitant on are things like two founders who are just driving deep on like OKRs and other like frameworks but there's only 2 of them, and they're like they're just diving in on stuff that they're like you just don't need right now. Just execute, like figure out what next week looks like and the week after, and have a longer mindset. I think what I see from the folks who are at that 1 to 10 goes back to actually a lot of the stuff that you're already talking about with the 3 legs, the stool, and kind of communication and what's that hub, what's the way that we're gonna what's the way we can scale this. Like you switch them over from reactionary to proactive, and the proactive is like, hey, we've got 10 people, we're thinking we're going to be 25, as 25 people, we can't do what we were doing at 8 and 3 and 2. So how do we, the 10 of us, and maybe it's consensus, maybe it's just as a CEO, think, how do you best work, and what's going to be the thing that is going to get us to this next milestone of 25 people and 2 million in ARR? Which again goes back to the beginning question. Like it is a constant, not a constant, but a reset every once in a while that you're sort of looking over, whether it's a board meeting or whether it's a new high level hire that's going to come in and help the culture, and also a recognition from the team that, hey, we're bad at some of this stuff, and so we need to hire people for it, and we also need to put in processes for that. I think those are all like, there's no like core answer to this, but it is those things that you evaluate. And I think by having by reflecting on what the past has looked like and what's worked and hasn't, and spending the time proactively to then say, okay, ahead is what we want to do, and here's how we think, here's the threads we're going to pull on to get there. Then you fill it in any way that you can. But I'm a firm believer of like celebrating the wins and making things attainable for people, because people want to work in a place where they can actually achieve and overachieve on things. I think primarily in startups, and then having a bit of a North Star, and to your point, having things that they want to grasp onto, that say, oh, this person fits that this person could be here, because at that 1 to 10, there's just so many unknowns, and it's not all going to go perfectly, to the point of this whole thing, which is it's pretty messy, but still having that, and saying, this is stuff we can touch and feel and get.
Two other things I would ladder on to and add is, one, the actions that you and your senior team exhibit and pattern are going to go a much longer way than anything you say. So if you're like, look, we're going to be a hybrid, office environment where we're going to be 3 days a week in the office. If you and your leadership team are not in 3 days in the office, that is like that is going to just send the wrong signal, right? Secondly is, if there are people that go over certain red lines, right? You have to take action. You can't punt on it like you might have done in the beginning phase, right? You got to take action, because that is like organizational debt that is going to just come due, and that's going to really, really impact your culture. Like, you have to take action on that, and like do not punt. It's so easy to do it. Oh, we've got this, that, and the other. But if that's an issue, you got to take. Otherwise, people, again, like, that's an action. Like, not doing something, like not getting rid of someone who is not exhibiting the right behaviors. That is also an action that people look at, and that will, impact your culture.
Yeah, and so, I mean, to your point at the very beginning of this part of the conversation, we could talk about this anyway forever. And I think, like, hey, Jenny, Devin, everybody at Underscore, we need a product readiness podcast. We need a repeatable sales engine, and we need a scale human capital as individual sessions. So we'll plan that and schedule that later. I do want to hop over to product readiness, because I think it is such a huge piece to this, and it's you've got such great insight into product readiness, and like what that, just kind of give people what that means, and like how that fits into this 1 to 10.
Yeah, I mean, a lot of this is you obviously need to have a product. So in the 0 to 1 phase, you're like, is there something of value here, right? That's delivering value for a customer, right? And you're exploring that, you're establishing that, right? You're going to have early adopters that are like, yeah, I have such a big problem. I'm willing to sort of see through all the warts and all the rough edges to go do that, right? To get from 1 to 10, though, you're going to need to have really a production, like something up on the truck that you can repeatably deploy, and that delivers, and predictably delivers value to your customers, right? Without a lot of, kind of like either, there's like table stakes features that you need to put in. And these days, by the way, like, with security, cybersecurity is such a big topic, being like SOC 2 is now kind of like table stakes for a lot of companies, right? And so it's not, and part of like what I'm trying to say in some of the principles I'm trying to articulate there is, it's not just the product itself, it's actually other things around it, right? Customer support, QA. Boy, like QA is something I would actually just like reinforce if I were to write another edition of it. Like, the importance of QA is something which, especially if you're doing deeper tech things, it is so important, right? Like the QA and testing and all of that, and having something hardened, right? If you're doing hardware supply chain and manufacturing and having that, in place, right? There's a lot of different things, and like, just like the day in the life of with the customer and customer support, those are all, you need that in place to be able to get to 10 on the product readiness side. Otherwise, you're going to be like scrambling. It's like, I call it squirrels in a box. Or like, you're going to like, customer may not see it, but you're just gonna be like scrambling in the background to stand things up and to support it, and it's going to impact you, right? A little bit of a story to share. A few companies ago, Videoplaza, video ad tech play, I joined, and we were probably around a couple million ARR, so maybe 2 to 3, and we had, for a variety of reasons, some good, some not so good, we'd sort of dug ourselves in a technical hole from in terms of technical debt perspective. We just kept on incurring tech debt on the platform side, and we didn't really know it at the time how painful or how costly it was going to be, but I would argue that was like one of the things that hampered us from actually getting to 10, because we were always having to like put resources on reporting, is actually like reporting to our customers what kind of performance they were having. We were doing things manually. We were having to patch things. It impacted the confidence of the field. Like, there was like so much cost to it. And that was like fundamentally product readiness issue. And I can kind of, there's a lot of lessons we learned from that, which we sort of talked about, but that was like a really good example of having something, but just fundamentally, like architecturally, there was so much debt we incurred. The product wasn't ready to get to 10.
Yeah. Well, and I love you have an awesome equation in the book where it's product readiness equals customer value times value capture times scalability. Now, we're going to give everybody on this call a book, so we can't divulge the Einstein level breakdown of this equation. But I do, and so you're gonna have to go read the book when we send it to you. But I love that because again, it goes back to the 3 legs of the stool. The stool is actually many small legs that make up these big legs that then go and allow you to be in the right place at the right time, doing the right things. I mean, going back to my Evertrue experience, I think one of the things that I think about a lot is our customer wasn't ready for our product. We felt like and that goes to the sales side as well, but it's higher ed, and higher ed is a tough place to sell. Long sales cycles, being ready in a lot of ways for that. The product readiness comes from the customer value, which is one of those little legs to pull on. And our customer value was really hard to get at. Big lifetime value if you can get them, but that long sales cycle and that small market really hampered the growth to 10, which eventually we get to. But I think that the book does such a great job of kind of like, let's big micro and or macro, and then let's go micro, and like just try to dive into some of these other things because we're all dealing with some sort of issues and problems here. What it is that you can't always put your foot on, or your the pen to the paper, but here it kind of like brings all that out to understand. And I think like that resonated with me immediately. I was like, oh right, like the equation isn't quite there to get to 10 because we were missing on this, and that was our market.
Interesting. Yeah. No, that's a great insight. Thanks for sharing that. Yeah.
So there's another great question here. So I want to share that here. Hello, I currently lead product marketing at Grammarly. Congratulations. Great company. Love that. Focused on our B2B offering. Question, your teams in the 0 to 1 phase will be critical in setting up your new hires for success in the 1 to 10 phase. Thoughts on how you can inspire proactive knowledge sharing and collaboration throughout the growing organization? That's an awesome question. Rags, you want to start?
Yeah, Brian. First of all, yeah, I mean, Grammarly. Brad, by the way, is an old friend of mine, and so you guys have blown past 10 a long time ago, and so what an amazing story that is, and we should probably have Brad on, by the way,
Yeah.
talking about that experience, and maybe something we can do. But yeah, I mean, the like in terms of like the proactive knowledge sharing collaboration, to me, this is like the culture piece, right? It's like what are the patterns, and there's like platforms you use, there's like the processes and just like the behaviors, right? So yes, there's like you can encourage sharing from like a top-down point of view, but if you don't pattern it yourself, and if people aren't doing that, then it's not going to happen, right? It's just like it's gotta be like you got to model that behavior, right? That's like for me, very very kind of like that's like the organic side, and then I think there's like the inorganic or planned type of knowledge sharing, right, and collaboration where it's like kickoffs and certain type of rituals that you put in place with your teams and others that are meant to like be more formal ways of sharing or collaboration, right? And the sales side, the quarterly kickoff is like a great tool that people use that I've used a lot of times, right? Where it's sharing not just sales, but also other functions that are brought in, right? Product marketing, and so on, right? To share what's going on. You got your all hands, you got different rituals like that. So I think you just want to be thoughtful about what are the rituals to put in place, and then what's like that kind of inorganic behavior that you're seeing and or that you want to model and pattern along with other leaders to really drive the right behavior.
Yeah, I mean, I completely agree on that. I think the other thing to think about is, especially for remote companies and hybrid world, like it does feel, and we're on Goldcast right now. We had this call earlier to prep for this on Zoom. I've seen maybe 15, 20 platforms that are built or starting to be built around this, like, hey, the hub of your world in remote can't be Slack. So like, it's not Zoom. So like, what are you gonna make it? What's the digital environment that your hybrid or remote team is going to be built on? We're at the nascent phase of that because we had to basically jump into this, and so I'm very excited about what the digital workspace. I don't think we're all going to be wearing headsets, tomorrow, living in the metaverse for work. But I do think that there's going to be other things that are coming that are going to allow for some of the kind of serendipitous conversation, kind of listening in on other folks who are in an open arena, either sales, customer success, those kind of things. Not to say like we sit around and wait for that to happen, but I do feel like that section of future of work is at a nascent phase. And as that continues to progress, that's going to have a big impact on culture and on the way that we are all kind of doing, as Brian has asked. I also would say, what we did inevitably, and I don't know, Rags, I'm sure this was a culture for you at some point in one of your companies, but like, it was like, hey, you have to throw it on the wiki, everything on a wiki. And then it was like, oh, well, nobody looks at that wiki, but we've all put it all on that wiki. And so like so that was a kind of like our skeleton of the company was in this wiki. You could go back to the wiki if you needed to like see what the process was. Or if somebody, more importantly, like when people left and there was this gap that like that person took care of that. Where is it on the wiki what they did? That's good to have that, like the bones there. But it isn't the most strategic and engaging form of doing this. And so it inevitably migrates over to Slack or then over to something else. And I think you do need a repository somewhere to hold institutional knowledge. And that, I don't know what that might be for a company now. But those are things that I think about. As kind of like hold this whole thing together.
One other thing to add, which may or may not have been Brian's intent, but it's something I would offer is, especially in these days when people join remotely and onboarding, right? Like you want to err towards spending more time with that person than less time, especially if they're remote, right? And it may be synchronous or maybe asynchronous, but you want to err, and you want to, because it's going to be natural. You've got, you've hired someone to solve something, and it's natural to then move on to other stuff, right? But you want to make sure they're successful. It's just like a customer. Like, it's like, you want to be the CSM for that person you've hired, right? Make sure they're successful, achieving success, right? And so that can mean, on the sales or CSM side, have them record some calls if you can't make it, and watch them and coach them, but like have a very quick feedback loop on that. So they know, they get the feedback from you right away. They can act on it. You can see that it's improving or changing, especially if you're not able to make the calls or whatever, whatever they're doing, right? And it's not just in sales, right? It can also be in recruiting. It can be in other, other functions. But you just want to find ways to just make sure that they're achieving success, right? And not just move on, because I've seen companies do that, and then inevitably that person, a lot of times just that person doesn't work out.
Yeah, and it goes back to our coaching and sort of manager training stuff too. And I mean, not everybody's built right away to do all that, and it takes a lot of there's a lot of techniques and things that you can learn to be a good and better manager all the time. And I think that goes directly to those things you're talking about. We are somehow coming up on time. It's been flying by. Devin has a great question, but if there's other questions, please get them to us now. As I said, we're coming up on time here. But Devin's question is curious about the underrated 1 to 10 hires that teams should really consider, especially as work has shifted over the past 2 years. What are those pivotal roles that you're seeing within a company to help you scale?
A head of people, that would be one of my top ones.
Absolutely.
At Videoplaza, our head of people, and later was like an HR business partner. I spent as much time with her as I did with any of my other, my direct reports. Actually, she was, she wasn't even a solid line reporting to me. And it's because from a recruiting perspective, from a coaching and management perspective, it's just all about how can people do their best work and both be challenged and, doing great. And the right head of people can really give you a ton of leverage there. They can have conversations with people you can't have, and vice versa. They can help you plan. And it's really important to have someone that does come from a people perspective. And it's not just about the admin and the kind of, comp and ben and that kind of stuff. We can go on more about that, but that's certainly a key role. Another one is tends to be around, I would say, finance and ops. Again, can be underrated, but especially depending on the business you have. But that they can just give you a lot of leverage, especially for stuff that you might not necessarily enjoy doing or might not be your sweet spot, right? Whether it's investor updates, helping you with the fundraising, the FP&A, that all can be very, very valuable. And again, I would say, tends to be underrated. Yeah,
I mean, I can't agree more with both of those. And I think the position, though, that I see too few companies hiring strategically, too few of them do it too late, is just somebody who's competent in marketing. I think, especially in Boston, for some reason that's like, oh well, we can do it, or we can figure it out, or we don't want to spend money on that right now. And it's just like it's like people. I feel like it's a great glue between various parts of the organization, and especially in the B2B enterprise, where we have a lot of our companies. I think marketing tends to be pushed all the way to the back burner, where it can be the strategic arm that helps you understand how you're going to get to your customers and how you're going to get multiple customers. And it's a great lens to put on a sales organization, and putting in lockstep. And also, when you do it too late, I find that the processes are very hard to reorient. And marketing should be there on a sales engine, helping and supporting and growing in a lot of different ways. So I just find, again, for some reason, that for the companies I work with, tends to be a massive deficit and not a forethought for them to hey, we're proactively looking for marketing. And maybe it's because they can't find people.
to get to 10, like you will need a strong marketing function. There's
Yes.
like there, you can't really get there without it. There's no doubt.
Yeah. Yeah. So anyway, fantastic question, Devin. Last question or semi-last question. As we wrap up, I'd also be curious to hear a story about the super important startup lesson that Rags had to learn the hard way. What happened? What was the learning? Oh, well, ending on a light one. Let's go.
Well, I would say, maybe I dive back into that that product readiness and technical, debt issue that we had. We learned the hard way a couple things, right? One was there was a big disconnect between the field and what the customer wanted, and actually what engineering was ended up building, right? That was number one. For some reason, things got lost in translation, and we were building something and optimizing for the wrong thing, right? We were building something, and again, there's reasons around it. Number two was actually there was there's something we realized about the culture, where the culture, first of all, we were known for having awesome special culture, and to this day, it's a great group of people. But at the same time, it was a very consensus-driven culture we had at the time, right? And what that meant was people didn't feel comfortable speaking up and saying, "Hey, I'm not sure, I'm not sure we're going about this the right way," right? And so they just went along, and then we kind of got stuck in a hole that way, right? How would what would I do differently, right? That's it. It also begs that question of like, what would I have done differently? I think, one is there are rituals that happen on the engineering product side, like design reviews, program reviews. There's different ways that you can set up, right, for forums for people to be able to feel safe in pushing back or understand, or challenging, or just like having a healthy, robust debate about what's being built and what isn't, and so on, right? That was something that, I would, in retrospect, I would have pushed to have in place, right? To give, you can still be consensus driven, but still have a very healthy debate on what to do and what not to do, right? And that was something that was, I would certainly agree. I would certainly do, and I could go on, but there's some like key learnings we had, having lived through that pain of just, just having lived through that pain of that technical debt. Yeah,
and you can read more about that in the book. We've come to kind of the end here. I want to give everybody, make sure everybody can go forth the rest of their day and their weekend. First of all, Rags, thank you so much. This is awesome. It's great to talk about all these tough topics. We've already set up Devin and Jenny on like 8 different things that they need to do after this for other conversations that everybody wants to hear. So congratulations on that. And we're going to send everybody a book. And anything else any other things that you're going to be talking about with regards to the book? Anything upcoming that you have, larger conversations?
Yeah, look, I mean, so first is thanks to Underscore for having me, and thank you, Jesse, and thanks to Silicon Valley Bank for sponsoring a copy for everybody here. It's fantastic and really much appreciated. And it's just a great service that you guys do. So I'm really, really thankful for that. No, I would just, I just love, working with entrepreneurs as much as I can. So reach out to me on LinkedIn if feel free to connect with me there, or if there's any question that we can answer, and look out. There'll be some more events coming out early next year. I think one we're doing at MIT that we're looking to do. So, but overall, look, it's even like right now where we are at Butler, it's still hard, right? And so I just want to let people know that it's very much a journey. It is growing pains. It is, sleepless nights. That doesn't change. But I'm hoping with some of these lessons, which I find myself like having to sometimes go through because I'm in the weeds, right? And then I've got to zoom out myself and try and be like, oh, like how do I avoid pilot purgatory in Butler, right? But
yes,
so it's just, I just want to say that it's just like, it is hard, but it's for me, it's super fun and rewarding. And I wish everybody the best of luck in that journey. And just enjoy the journey.
Yeah, likewise, available via LinkedIn and Twitter. Happy to help any way that I can. But these are the important conversations to be having. And thanks to Underscore for letting us host it and bringing this community together. But yeah, I mean, listen, I would also say if you're having these troubles and you're in this, congratulations. Like, you've made it past one of the hardest things you can do, which is going 0 to 1. 1 to 10, it's hard, but it's an amazing opportunity, and you're on the path. You're on this, and these are great problems to have. And there's a lot of people out here in the community that can help you get to the next phase. So anyway, fantastic. Thanks so much, Rags, and happy holidays to everybody.
Thanks, everybody. Thanks.